The World Bank has upgraded its economic growth forecast for Sub-Saharan Africa, signaling renewed optimism for a region long battered by high inflation, sluggish investment, and global economic shocks. The latest report points to easing price pressures and improved agricultural output as key drivers behind the expected rebound, marking a cautious but hopeful turning point for the continent's economies. According to the World Bank's Africa's Pulse report, growth in Sub-Saharan Africa is now projected to reach around 3.4% in 2025, up from a previous estimate of 3.0%. This revision reflects the region's progress in curbing inflation, stabilizing currencies, and restoring fiscal discipline after years of post-pandemic disruptions and geopolitical turbulence. Inflation decline spurs economic confidence. Inflation, which had soared to double digits in many African nations between 2021 and 2023, has begun to recede thanks to tighter monetary policies and declining global food and energy prices. In Nigeria, Ghana, and Kenya, three of the continent's largest economies, central banks have maintained elevated interest rates to cool demand and support their currencies. The World Bank noted that regional inflation has fallen from an average of 14% in 2023 to around 9% in mid-2025, easing pressure on consumers and businesses alike. The stabilization of prices has allowed households to regain purchasing power and given governments breathing room to focus on growth-oriented spending. The worst of the inflationary storm appears to be behind the region, said the report. Lower prices for fuel and food, combined with resilient domestic production, are helping many countries recover from the most difficult macroeconomic period in over a decade. Agriculture and services leading the recovery. Improved weather conditions and better access to fertilizers have boosted agricultural yields across several countries, particularly in East and West Africa. Nations such as Ethiopia, Côte d'Ivoire, and Tanzania have seen stronger harvests that not only enhance food security but also support exports and rural employment. Meanwhile, the service sector, especially digital finance, telecommunications, and transport, continues to expand, driven by rapid urbanization and technology adoption. Fintech innovations in Kenya, Nigeria, and South Africa are deepening financial inclusion, allowing small businesses to access credit and investment capital more easily. Tourism, another key pillar of growth, has also made a robust comeback as global travel normalizes. Popular destinations such as Mauritius, Rwanda, and Namibia report visitor numbers nearing pre-pandemic levels, adding vital foreign exchange reserves to their economies. Persistent challenges cloud the outlook. Despite the improved forecast, the World Bank cautioned that Sub-Saharan Africa still faces significant hurdles. High debt burdens remain a pressing concern, with several nations devoting over 40% of government revenue to servicing loans. The report urged countries to improve debt management and negotiate restructuring agreements where possible to avoid fiscal crises. Power shortages, infrastructure gaps, and ongoing conflicts in parts of the Sahel and Horn of Africa continue to undermine productivity and investment. Furthermore, the region remains highly vulnerable to climate change impacts such as droughts, floods, and erratic rainfall, which threaten agricultural stability and food security. The World Bank also warned that global uncertainty, especially fluctuations in commodity prices and slower demand from China, could limit export earnings and strain government budgets. Reform momentum and private sector potential. Encouragingly, several African governments have accelerated economic reforms aimed at attracting private investment and diversifying growth. Nigeria recently overhauled its foreign exchange policy, while Kenya and Angola have introduced measures to streamline business registration and reduce bureaucratic red tape. The World Bank emphasized that sustainable growth will depend on private sector dynamism, improved governance, and regional trade integration. The African Continental Free Trade Area (AfCFTA), if fully implemented, could unlock billions in new trade flows by lowering tariffs and harmonizing regulations across member states. A cautious but hopeful outlook. The upward revision in the World Bank's forecast offers a welcome sign that Sub-Saharan Africa's economies are beginning to recover their footing after years of turbulence. While structural challenges remain, declining inflation, strong agricultural recovery, and growing digital innovation suggest a more resilient path forward. Sub-Saharan Africa's recovery is not yet complete, but it is gaining traction, the report concluded. With prudent policies and continued investment in people, technology, and climate resilience, the region can turn short-term stability into long-term prosperity.